We got a nice little bounce here at the open, up 200 on the Dow. Still circulating 4K. VIX is lower, though. Let's get to Bob Pisani. Hey, Bob.
Yeah, nice little bounce. In fact, it's a nice little bounce right across the board. Even sectors that haven't been doing so well for the month of February doing okay today. Let's take a look at the sectors right now. So China, Jim was just mentioning China, just a terrible month. As a lot of people simply abandoned China once again. People are talking about China as whether or not it's investable. But MCHI, which is your key ETF for China there, bouncing nicely today. Retail, which has had a terrible month as well, also bouncing nicely today. Banks held up pretty well, and that's doing well today. And some of the other sectors here, like semiconductors, which have also held up reasonably well. Tech's been one of the modest winners this month, also doing well here. Railroads are bouncing. Transports are bouncing nicely here. Union Pacific, CSX, Norfolk Southern, all on the upside here. Of course, Union Pacific just collapsed recently. It was 212. It went to 190 or so. Now it's back to 212 again on word that there might be a new CEO down the line. So that's moving on the upside. And big cap tech's doing well. There's been some winners and losers this month, but NVIDIA has been one of the big winners. That's bouncing. Tesla also has had a great month. Meta has as well. Intel's had a terrible month, but it's bouncing. Alphabet's not had a good month. It's bouncing. Even some other ones. Amazon, not a great month, and it's bouncing as well. So tech benefiting right across the board. A lot of bearish commentary over the weekend. Of course, you all heard about some comments out of Morgan Stanley and some other big wirehouses commenting. But I think the important thing is let's take a look at what the earnings situation is looking like, because earnings have been coming down rather dramatically, but the rate of decline has slowed. So on December 1st, this is the total estimate for the S&P 500, which is the way they figure these numbers here. 231 on December 1, went down to 229. And by February 1st, the numbers were coming down really fast. There was a 6-week period where they just kept dropping the estimates down to 224. Today, it's at 222. So what's happening, if you look at this, is the rate of it's going down, but the rate of decline has been slowing rather noticeably. And that's really what you want to look for. You want to look for the delta, which is how fast are things changing, the rate of decline slowing down a little bit. Now, that's not a big help all along here, because you want to keep an eye on what's going on with the overall trend here. So the paradigm has been we're going to get lower inflation and we're going to get moderating rates. That means stable earnings. That's one of the reasons the rate of decline has slowed down. But this may be wrong. You saw the data last week with the PCE. That paradigm may be wrong. We may have a new paradigm here where we're actually still having high inflation, or inflation actually going up, which is what we saw in the PCE, and higher rates. If that is the new paradigm, that means lower earnings. It doesn't mean stable earnings. And that's why some of these analyst estimates are kind of in peril now based on the data that we saw last week. That's the bear camp that we're seeing here. So if you want to take a look at the S&P 500, you want to take a look at some of these sectors here today, it's still very pricey. Today, 17.9 forward earnings. Historic average is 17. So you see the market, the prices are still high, and earnings may have to come down if that new paradigm actually prevails. In terms of the February winners and losers, if you take a look at some of them, technology has held up very well. It's been flat. Semiconductors have held up. They were a big winner, but all the move was up in January and the first part of February. Banks flat. Retail have not had a good month. Energy has not had a good month. But the only reason we're not a lot lower is because of the technology. So S&P 500 is just above its 200-day moving average. It's 39.40. We're looking at 39.99 here. You see a nice move up. So that's about 50 points above that S&P 200-day moving average. That's the critical number people are watching right now, 39.40.